Gents, good morning and good evening. The three components of productivity are land, labor, and capital, with labor becoming an ever acute issue. Your deep dive report on automation isn't just timely, but it also features a proprietary model looking at growth rates, 9% CAGR, out to 2035. What are the key drivers to that growth, and where do you differ from perceived wisdom?
Yes, Rod. We see tightening labor supply and rising costs lifting the discrete automation market from $78 billion last year to $217 billion by 2035. There's the structural demand tailwinds from reshoring and relocation due to geopolitical risks, but also digitalization and the use of AI and decarbonization investments. These all add to the long-standing adoption drivers, such as rising wages and labor shortages to create upside opportunity to market growth estimates. Unemployment rates are near multi-year lows in the US, Europe, and Japan, indicating a shortage of labor, which could lead to high wage inflation as employers, face tough competition globally when recruiting or retaining labor. This low unemployment levels could also lead to a scale mismatch, which in turn reduces productivity. Manufacturers know that investing in automation can provide a long-term hedge against this risk. They can instead redeploy the workforce towards more creative and strategic roles that justify the high wage bill. We therefore see a major step change in efficiency gains, lifting automation's return on investment. And when we scan the European and the US peers, we find that Siemens and ABB are among the highest exposed to faster growing Asia, where markets could grow well above that of Europe and US at 11%. Schneider is more globally balanced.
Thanks for going through that, Omid. From my side, I'd like to take through some of the methodology a little. So market outlooks can be variable considering the broadness of the scope of the industry, discrete automation. So we started by putting together key company revenues to gauge the market size, and from there, Japan, China, Europe, with working age population declines, we gauged how much equipment and solutions are needed for placing declining workers on the factory floor. Also, consideration of wage inflation and also real GDP growth in each market as well. For North America and the rest of Asia, population decline isn't something immediate, but we do factor in capacity growth, labor cost increases, and also pass-through of costs to customers, which is also crucial in our study. We do consider two economic downturns during the period to 2035, and also a 3% shift of production capacity from China to other Asia, considering the geopolitical risks. And our model is adjustable and also can be downloaded from the terminal, which is another perk there. From the Japanese firms, to highlight, Keyence has potential to outgrow the market, considering the overseas revenue scope catching up to other players with higher revenue exposure there, and also has the highest margin. Asia and China, ex-Japan, is roughly about 35% of exposure for the Japanese, which are expected to see double-digit growth in the longer term.
Now, despite robotics being a feature of industrial production for years, it's surprising to see that penetration rates are still really low. What's the driver to unlock that?
Yeah, it's a great question. We think robot demand could grow faster in new end markets like healthcare, life sciences, and construction above 10%, than in traditional industries like manufacturing and logistics, where demand is set to grow at low single-digit rates. AI can support software, for robots to handle more sophisticated tasks such as surgeries, laboratory, DNA testing, or dispensing medication, lifting its penetration rate. These applications apply robots beyond simpler tasks like material handling in warehouses or welding at auto production lines, expanding the addressable market for companies like ABB and Yaskawa. This can also reduce earnings cyclicality by broadening their exposure beyond autos and logistics. We could see high single-digit growth for robots in renewables, consumer and packaging end markets, outgrowing traditional industries like autos. AI applications can also include insight generation, such as predictive maintenance and system optimization, as well as teaching new skills to robots. We saw venture capital funding in robotics retreat in 2023, when investments fell to $10.6 billion from 18 billion in 22 and 28 billion in 21. AI investments could significantly lift this over the next 3 years.
Yeah, and from my side, having worked in a factory, auto factory early in my career, robots have primarily been in industrial use on the welding line, for example, and collaborative robots came into the picture. And they were developed to actually work next to workers and was a new step. But however, it lacked the flexibility to broaden out. So currently, about 10% of industrial robots are collaborative. And expanding on that, we are seeing some technology to ask the collaborative robots to actually think more using AI. So it allows more non-repetitive tasks to be automated and with less programming at the same time. So Yaskawa, for example, has an AI installed robot series using NVIDIA chips already out in the markets now. And humanoids are another area that is further growing as well, and newcomers will surely come out of this segment, considering companies like Tesla and Figure Robots are developing at a fast pace. So this area can further expand and expand capabilities and manage tasks closer to humans.
Great. And then finally, it'd be a bit remiss if we didn't address tech's influence on automation, and particularly when we think about the epicenter of semiconductor production, which is, of course, Asia. So what does the semi space look like for automation providers, and who would benefit from that?
Yeah, so generally, global demand growth is headed for recovery from the end of 2024 and into 2015. Semi sort of expects about 18% year-on-year growth in wafer fabrication equipment. And over the long term, our tech team estimates semi equipment market to grow about 7.5% CAGR, but higher considering potentially higher considering strong demand, including for Gen AI. Exposure within Asia. Some of the companies to highlight from Japan would be companies like SMC, CKD, Yaskawa, Armron, having a decent exposure in the sort of electronics, including the semi space. Uh, KHI, for example, Kawasaki Heavy has over 50% from chip industry as well. We do have a chart in the report that show key players with various exposure to end markets in a one fine chart as well.
Fantastic, gentlemen. Appreciate your time. Thank you very much.